Now, everything we say is official. It's going into the AI. It's going to teach the AI how to do revenue management. So I hope you guys are excited. Really pleasure to have you all here today. We've got a great panel. This is our Revenue Management Roundtable. I don't know what number we're on. We changed the numbering system. So it's like 14 or something, but I think it's like Revenue Management Roundtable 3, 2025. Really excited. Revenue Management Roundtable, if you haven't been to one before, is an opportunity for us to bring professional revenue managers from kind of all over the space together and talk about how things have been going, what strategies they're implementing, what they're seeing. We think that revenue management, a lot of people are competing against each other, but revenue managers, for the most part, tend to be competing against the consumer first and foremost. So there's a lot to gain by having good contacts and hearing what other revenue managers are doing and thinking. And we want to have an avenue for everyone to be able to access that. My name is John DeRelay. I'm the head of revenue management education here at Wheelhouse. Many of you have probably talked to me if you're using Wheelhouse or considering it. Wheelhouse is a dynamic pricing and revenue management platform. I've been a revenue manager in the space for well over a decade now. Been with Wheelhouse about 4 years, worked as a consultant for a little while, and then I was the head of revenue management at an organization called Stay Alfred for pretty much the entirety of that company's life. Really excited. We have a great panel here today. Why don't we do some intros? We'll go around, let us know who you are, where your portfolio is, maybe the size of the portfolio, and if you want to say anything else, please feel free to. And why don't we start with Joe?
I'm Joe Daugherty. I'm the Vice President of Business Development for a company called Multiporpoise Management. We do all condos here on the Central Oregon coast and in Central Oregon Bend area. All condos built in the 1970s, so yippee, that's a blast. We do, our portfolio size is about 230 and growing.
Awesome. Thank you, Joe. And Valerie?
I'm Valerie Clagett. I'm a Senior Director of Revenue for Awayday. I oversee several hundred properties across Colorado and Tennessee, so mountain markets. Yeah, just really happy to be here. Love being in the revenue management space.
Awesome. Thanks, Valerie. And Heather?
Hi, my name is Heather. I'm partner at Richer Logic, and I've been doing revenue management distribution pretty much my whole career. Between our team, my partner and I, we've done revenue management in casinos, resorts, hotels, restaurants. And so being in this short-term rental, vacation rental, hybrid hotel space is really fascinating. And as John has said, like things are changing so quickly. It's still kind of the Wild West. And Richer Logic provides revenue strategy analytics, really kind of revenue management for hire for portfolios in the short-term rental, vacation rental space, some hybrid hotels, and we work just across the U.S. and a little bit outside the U.S. also.
Awesome. Thank you, Heather. And Amanda?
Hi, I'm Amanda. I'm the Director of Revenue Management at Monarch Collective. We're a collection of about 20 different individual brands located all over the U.S. And we have a little over 5,500 units all in total. So we get a good peek at how the whole industry is doing across the U.S. in the different markets.
Awesome. Thank you, Amanda. Really excited for this panel. We've got a lot of really good revenue managers that have a really good viewpoint of really what's going on across the country, because we know that market to market, things can be very different. But I think there's also some trends that are going to be pretty similar. Before we get started, I'm going to do one product plug. If you've joined us before, you know I don't do this very often, but I do want to tell you guys something. So Wheelhouse is offering the majority of our business intelligence tools for free now. So we've spent a lot of time developing our pickup and pacing reports, a number of pieces of our market data. Our CFO was out on leave, and we convinced the CEO to give it away because things are difficult and people need to level up their revenue management game so we don't all collapse the price at the last minute. So if you want to try out or learn more about the business intelligence tools that are available, ping Wheelhouse. We'd happy to get on a call, provide some training, and you can get access to all of these different pickup reports that we have for free. That's enough about the product. Let's talk about revenue management. So First thing we're going to talk about right now is we're kind of in an interesting time. We just came out of spring. Our last Revenue Management Roundtable, we were in the thick of spring. It was a little bit of a stressful time for those revenue managers, I think. A lot of people were realizing that the year was maybe not going to be as optimistic as their forecasts that they built at Q4 were going, expecting it to be. We're now a little bit in the lull where we should be solidly in the booking windows for summer markets, but we haven't quite hit summer yet. And, we're kind of living in that May situation, which tends to be a shoulder for a lot of summer markets. Tends to be, the ending shoulder or kind of into the low season for the mountain markets. So it's a good time to kind of get an impression of like what is going on. So let's start with just how the past has gone. How do you think the spring went? How did your properties do, or what kind of strategies did you implement because of spring and into this kind of like lull? And why don't we start with you, Amanda? Tell us a little bit about how the spring went for your team and what they did.
Overall, spring was okay. It was definitely market specific. Saw a much tougher spring in the Southeast and Florida Panhandle area. That one hit harder than I think a lot of other markets. But all in all, it ended up leveling out okay if you count April into that springtime thing, because it definitely, March and April tend to balance each other out a lot across the markets, and April definitely pulled the March lag up a little bit. But then there was a couple of markets like San Diego blew it out of the water. They were insane in Q1. It was ridiculous compared to the rest of the markets. But it was a lot of last minute. When I say last minute, I say 90 days out, really going, okay, what are we doing? How are we watching the pickup? What's coming in? More so than we're normally having to do. We had to start that getting in the weeds a little bit sooner than we would normally have to. That was the biggest change, as we saw that decline, especially for March, come a little bit earlier, and not fill in quite as much. And so we had to start making changes sooner in the booking window.
That makes sense. I know this is going to be different from market to market, but do you have some heuristics about like how far out you're paying attention for these different seasons? Or do you have data points that you're using to trigger when to pay attention?
Yes, but it's going to be by market, by house size, I say house size, but that's a generic use case. I would say by probably price point is probably a better way of saying it. Is an easier way of, it just tends to coincide a little bit with bedroom size of how far out we're going to go. So we already knew going in that the first 2 weeks of March were a little bit going to be behind, because we noticed a lot of our snowbirds this year, and we're noticing it for 2026 too, aren't staying through that first couple of weeks of March. They're stopping at the end of February, which is a big change, especially in the Southeast. And that really put a dampening on March. So we knew going in that was already going to be a struggle, because without snowbirds in those first couple of weeks of March, it's really hard to do anything. There's just not a lot of people going down that time. They're going to wait towards the later end of March and spring break. So we start looking anywhere from 120 days out to 90 days out, and then trying to understand at that 60-day mark and that 30-day mark, depending on the type of unit it is and whether we know we're going to get that last minute demand and how full the market is. This year, we didn't see as much market occupancy in some of our smaller units, and that took a beating on some of the smaller units, and that where it usually is able to fill in, it wasn't filling in that 45-day mark.
Yeah, that makes sense. They're going to be the most susceptible because they inherently have the lower booking windows of, if prices start to collapse in a market, why not get a 2-bedroom if it's in your budget?
Exactly. Yeah. Yeah. And I think holistically, the sentiment that was around in Q1 with finances and how people were feeling about the economy, that demographic of guests that's probably booking the smaller units or the less expensive units, I think was probably holding out a little bit more. They're watching what they're spending a little bit more.
That makes
Whereas
sense.
on our higher end properties across all of our portfolios, we've not seen any type of hit. They're just as in demand.
That makes sense. Awesome. Thank you.
Yeah.
Valerie, do you want to tell us a little bit about what you were seeing in spring and what your team kind of was doing in response to that?
Yeah, absolutely. I think the shift of Easter from the very end of March to late April was really challenging in ski markets. By April 20th, most ski mountains are done, right? So that transition had a pretty big impact. Obviously, knowing that heading into it, you're thinking about that the whole time, right? But with that, spring breaks shift. And so you just didn't see quite that same demand at the end of March. I think we did a good job of kind of capitalizing off of that. But similar to what Amanda was saying, like we didn't necessarily see that across the market, right? I think that was some like early action proactivity kind of dealing with some of that. So definitely still a strong ski season. I will say we're still seeing softening demand in some of those markets where holidays like President's Day didn't necessarily sell out in certain like ski markets like Summit County, right? That you usually expect to be high. Summit County was pretty upfront that they didn't see the occupancy they've seen year over year. And that's definitely something, I know we're not talking about the future yet, but it's something we're thinking about when we think about 2026, right? Is that going to continue? And what kind of proactivity does that require? Thinking more about Tennessee, which is very different because spring is like kind of low time there. In the Smokies, I think like similar to what Amanda was saying, we really observed that last minute demand really wasn't there in the way that it has been historically. Now we do think that like I-26 not being open heading into the mountains, or 40, sorry, was the part that was closed. Like that certainly was a contributing factor when it opened up. I'm now forgetting if it was March 1st or April 1st, but when it opened back up, it was just one direction each way, right? And so we did a lot of analysis and definitely saw that, location people were coming from had an impact. But it definitely has us thinking a little bit about advanced bookings, solely because if that last minute isn't guaranteed in markets that tend to do well at the last minute, that puts you in a different position, right? So really watching those lead times and not just the overall average, but in how they're falling over time and how that's stacking up, because it's going to continue to be a factor. Obviously, in the Smokies, supply is a big factor with this as well, right? Supply continues to rise there. So even if demand stays the same, it's fewer bookings per home, unless you can steal some market share. So just trying to stay really mindful of those changing factors, even if demand is staying fairly consistent, that supply change is certainly having an impact.
Yeah. I think it's really interesting to I'd like to hear a little bit more about like what kind of expectations you're kind of setting for these early booking things. I have a hunch that like it seems like at least across the Southeast that spring kind of consistently underperforms expectations. I think part of that is an expectations problem that creates a situation where you're overpriced. Now everyone's competing in the short term. It does worse because the irony is over the last 2 years, we've seen the fall perform really well in people psychologically, right? But they also expect a lot less out of it. And so I'm wondering, like, you're kind of talking about this in a much more granular way, is even applying this to like certain holidays, dates, even thinking about how these kind of temporal aspects are going to affect it. But what kind of things are you doing with your team to kind of change these expectations? Are you adjusting how you're starting the rate? Are you changing when you're going to look at it?
We talk a lot about like moderation, right? A bird in the hand is worth two in the bush. We don't need to like undermine pricing in a market early, but we also don't need to go for broke. I think like we all probably lived through the really fun COVID days when you could like price it at whatever you wanted and people would pay it. And homeowners were like, I actually don't think my house is worth this. And you're like, don't worry, someone will pay. We're not there anymore, right? And I think revenue managers can sometimes want to take that big swing, right? A high ADR booking is nice on like your checklist. You're like, oh man, that looks good. That's not my concern. My concern is like how we're pacing, right? I think like the impulse is to anchor to yourself year over year. We're in some markets saying, I actually want to see my booking trends shift. And we may be like intentionally changing our pacing, trying to stretch out that booking window. We're watching really closely how markets are moving, like what booking pace looks like across the market, how much occupancy they're gaining, making sure we're not just like digging ourselves a hole to deal with long term. But I mean, I think moderation is the word we throw out the most, right? I'm not trying to chase the bottom. I'm not like really concerned. My ADRs may be lower now compared to where they were this time last year. But my goal is at the end of the day, my ADRs are probably higher because they sold earlier and I was less reliant on last minute business. Does it always play out that way? No. But when it works, it's great.
Totally.
Yeah, kind
Awesome.
of.
Well, thank you. Go ahead,
Yeah, I was
Amanda.
kind of bouncing off Valerie that spring expectation. I feel like, especially in the Southeast, they get that one really good booking that's a freak booking, right? We all get them that you're just like, oh, okay. And they get that stuck in their head, and then they think that that should be the rate for all of spring. And we haven't really gotten away from that. And I feel like in the Southeast, for years, fall has been a better time of year to visit, but people don't associate it. They associate spring break. And so mostly it's been homeowners that have come and they've used the fall for their vacations and their times, whereas locals know that that's usually the best time. The water's the nicest, the beaches are less crowded. And I feel like consumers are catching on. And I don't have children, but my friends do. And there seems to be longer fall breaks than there were, you know, several decades ago, where it was usually spring break and you got like a day here and a day there in fall, where we're seeing longer school breaks in the fall, which I think is leading to more vacations in the fall. And because inherently the bias is that prices are cheaper, people are picking up on that.
Yeah.
Maybe I'll jump into a few spring final comments, or and then it sounds like we're ready. We're like getting ready to talk future, but totally agree on the macroeconomic factors of the impact we saw in Q1. Maybe that's lessening as we move into summer. The Easter move for sure. Totally agree with folks on that. In some markets, April increase made up for March shortfall, but not always, like ski. I think that Valerie mentioned. And then in general, this trend of shorter stays, shorter booking window. So will that continue for all these factors, right? People want to take the trip, they have less money, so they shorten the stay. They don't spend the money up front because they want the confidence, so they end up booking last minute. Is that's kind of like the storyline of why this trend may continue. And then the supply increase is an interesting one because it's not always that there's a lot more like new inventory. Sometimes it's inventory that hasn't been on Airbnb or hasn't been on Vrbo, and now it's like on these channels. So just kind of it's an interesting dynamic of it's still new competition on that channel. Few other kind of things that haven't been mentioned yet that we're seeing with partners. I think our industry is realizing more that they have to talk more than about just price. That especially when you're hitting the bottom in your shoulder, the listing optimization, content. So these are becoming like one conversation more and more, which is great. I think that's a good trend for our industry. The other thing we talk a lot about is like, what are Vrbo and Airbnb doing? What is your API capability in your PMS? Like, how can you leverage these tools based on kind of what you have? And then with this shortfall, just one last thing I'll throw out there, curious to get feedback on, is in the past, we've seen our industry with the opportunity to shift share from hotels. So people will still take the summer trip, still maybe want to go for the week, but they're going to look for the more economical way to do it. So that's an interesting conversation if you're like, well, what do I proactively do to go after shifting share from someone who might typically stay at a hotel? I'll stop there.
Yeah, I think a lot of those make a ton of sense. I'm trying to it kind of we've been doing a lot of like data deep dive, kind of like mini roundtables with property managers in different regions, and it's given me an opportunity to really look at a lot of data across it. And there's kind of like some stories that stick out to me, right? Like in the South, like on the Panhandle, you have really high expectations, still entrenched expectations for spring, but a very dynamic rate position. Like people are paying quite a bit of attention. And you've already seen a really big destruction of the length of stay stuff. As you move up into like Georgia and South Carolina, their rate positions tend to be a lot more stable. They don't quite have the same spring expectations, but they haven't broken down the length of stay stuff, and they're not doing it early enough. We talk to these people and they're like starting to consider it. It's like, well, you're considering it for June. June's next week. And I think that that's actually probably a trend, and that's helpful for those people to like, that's why we have a conversation like this. If you're in South Carolina, those markets that were probably under a lot more pressure this spring because they have bigger expectations for the spring, they have already gone through the process of breaking down those. And once it started to happen, it happened very quickly in the market. You went from like everyone's maintaining these 7-night Saturday to Saturdays to within 2 years, that's a minority of properties that maintain that. Texas is a little different. Like they have very short booking windows, and I think part of that is they hold a little too high. They haven't really gotten ahead because it's come in, but as we reach these environments where the short-term window is less stable, we don't quite see it. The Northeast and the West Coast are different. Like I'm obviously not talking about mountain markets right now because I would usually use them as like a barometer for demand, but I think that's actually deviating quite a bit. You can't. Like a good ski market now doesn't tell you if the summer is going to be good. The Northeast, they just don't have enough occupancy in the spring to know you're taking your gamble for summer, right? So you just have to be on top of your pacing in May and April. And the West Coast, the West Coast is, I don't know what to think about the West Coast. It's super weather dependent.
Well, so dynamic, right? West Coast has like so many different markets too. So yeah, a lot
Yeah.
of
Speaking of
great
which, Joe,
markets.
why don't you tell us a little bit about how the spring's going for you?
Yeah, spring was pretty weird. I'm on the West Coast, Central Oregon coast, and Central Oregon Bend, which is ski market like, but also kind of behaves kind of like a summer market. But yeah, spring ended up, you know, the point about, some of the early worries have kind of dissipated, and we seem to be a little bit back on track. That seems about right. We mostly got to the same place we ended spring 2024. Just we got there in a really different way. Spring break was slow for us this year, and you know our portfolio is different. We're one bedroom condos, so we are really slugging it out with hotels, and we have to be hyper aggressive, kind of in that last minute window, which for us is within about 2 weeks. So we saw, you know, shrinking spring break, but it had a longer tail on it. So again, we kind of ended up in the same place. We just got there differently. And then just for kind of the second year, we're seeing this just increasing shift to more a sharper split towards weekends, which, you always see that in a drive-to market like us. But, um, with the weather being pretty poor this spring, I think no one's coming here Monday through Thursday. And, we've just had to make some adjustments to try and attract some bargain hunters and see what we can do. But pretty optimistic. I think we learned some things. Um, One of my takeaways for spring is just, all right, we're gonna dial back spring break a little bit next year. We've already started that, but we're gonna take a more conservative position in 2026 and see what that does. And I think we'll see a little bit more of this early pickup and maybe be able to make some adjustments from a position of strength rather than trying to fill last minute.
Yeah, that spring break thing is kind of interesting. I think there's a few things at work here. I think I think some of it is like the consumers themselves are a little bit more willing to wait like Like you take time off work or pull your kids out of school a little bit to find the deal, or travel when you find the deal versus just travel on these dates. And that sometimes mismatches, like people have expectations. And we work with a lot of clients that do like a lot of spring break science, right? They're like, they know every date range, they're looking at the source market stuff from their CVBs, and they're still not feeling like they're getting it right. And this is kind of like an urban approach to revenue management, which I think is helpful, which one, it does mean you have to be a little more conservative, which means you have to have a portfolio size to absorb being more conservative. That's one thing to remember. If you're smaller, it's harder to do this. You have to take a little bit more risk with the ADR and respond fast. But it's let the consumer tell you where they want to stay, right? I bring it up as an urban thing because conferences are like super hard to track and super hard to know if they're going to spill out. So you can track all the conferences, but you don't really, it's hard, like you're at a lot of risk by putting too much rate on conferences without getting evidence of booking. So in a way, it's like you need to have a reasonable price and then just react to where the people decide to book. And you start to see some of this weird booking trend. I've noticed the last few years, especially across the Southeast, like I noticed that like the dates around 4th of July book really strong and then the 4th of July lags. And I think that is just an example of like the mismatch of expectation versus what the consumer is willing to do. And so if you're savvy, you don't want to give away the farm, but you can find ways to like let the consumer tell you what days are going to be big and grow your revenue on those without falling behind on other dates. It's hard. It's a hard balance. You got to kind of make those choices based on your own portfolio size. But that kind of key truism is like, let the consumer tell you where they want to stay. And I think that's super true in spring, right? I talked to a number of folks who were very surprised about May occupancies, actually. I don't know if that's something that you guys saw in portfolios, especially across the Southeast. I haven't heard that from Mountain Portfolios, Valerie. But that
Our
was
May
one of
was
those.
great.
Good. Awesome. Well, let's hop over into what's going on kind of right now. What are you guys seeing for the kind of booking pace for the summer? Are there changes you're making or your team members or clients are making? And how do you expect this to kind of shape up? What do you think you're going to have to do? And why don't we start with Heather this time? And we'll go from there.
This is a trend that we're seeing across multiple markets. It's really more of a summer shortening where you might think, okay, summer doesn't really start till mid-June, but that's really turned into like June 2023. You know, summer's over mid-August. That's kind of turning into August 7 through 10. And that peak July, for the most part, is still coming through. In some cases, it's required some rate reductions to speed it up. What I think is still really interesting and so hard to forecast is the summer demand going to be there, but just be so last minute? And this balance of like, how much do you try to keep up with the pace you had in the past and discount versus like, well, those peak July weeks, will they still just like sell out? They're just not going to sell out until 2 to 3 weeks prior. And it's just an interesting conversation that gets into kind of what you were saying, John, about like, well, how big is your portfolio? What's your risk tolerance? And, you know, how much do you kind of lean into the historical trend versus just feeling really behind pace and dropping right now?
Yeah, it's very risky because I think in our space, you can almost always now, well, except for that blip around 2021, you can assume that if the occupancy does come in at the last minute, it's going to come in at a lower rate position than you are now, right? And the question is like, are people buying? I've looked at a lot of the kind of regional data across the Southeast, in particular. And what I found is there is a pretty consistent, it's not true in every market, but there's a pretty consistent difference between the top performing listings and the market average, in that the market average consistently has rates, they're trying to push the rate position across the market by 10, sometimes even as high as 15%, and they're trailing occupancy pace. The top 15 to 20% of listings don't have that same trend. They tend to be much closer to their historical occupancy pace as an aggregate group, but their rate position is at or slightly below or slightly above their historical position. So it does kind of counter that, which is like, yes, those bookings are going to come in, but are they coming in because the rate position is actually where the consumer wants to pay finally? And now it's probably lower than that position because so many people are competing for whoever's out there.
That's a
Um,
great, like, what are your comps selling, but what are people actually buying?
right.
And like what data are you looking at? The kind of current rates for sale or what actually has been booked? Yeah.
Yeah. Every
Sometimes there's a
available
big
commodity
disconnect between
has
the two. Yeah.
a- Um, Joe, why don't we hop back to you and we'll come back around the horn. What are you seeing for summer? What are you kind of expecting? Um,
Yeah, so summer looks pretty on track for us relative to kind of what it was last year. Our ADR is up a little bit, but that's some early Friday, 4th of July reservations on the books. That's, I think, floating that a little bit more than what would be kind of normal. But July is looking pretty good. June is on track. August on the coast is kind of where it is, but we're seeing an interesting trend in Bend. August is crazy, crazy hot right now. And I'm interested to see if that bears out as we kind of get into wildfire season and people start hearing about that, because that's a real factor in play for certainly our Central Oregon Bend market. And we hope it doesn't affect our coastal market, but it has in the past. So kind of trying to, all right, do I want to take what's on the table now and get them locked in, or do I want to, you know, do I want to play a game of chicken with, people accounting for wildfires and their travel plans? So that's a conversation we're kind of having internally. But right now, August is, you know, it, we're our pace is crazy, crazy hot in Bend.
is that good August pace? Do you have is there a rate difference between like your peak summer and August that you build into your rate plan?
Yeah, historically, August is, for example, last year we had a bad fire season. June outperformed August in our Bend market. That's not historically how it goes, but so yeah, I've got a lower rate position August over July. And just in general, that's a position both for our coast market and our Bend market. It's just, how wide is that gap going to be? And
Yeah.
that's my big, everything's on track. That's my big thing I'm watching right now is what's going to happen with Bend August. And we'll talk about fall a little later, but I'm seeing some interesting stuff in fall.
Yeah. And for people who are on the East Coast, summers in the West tend to go later too. So we start later and go later. So that August tends to be considered a little bit more of a summer than say you might see in like Florida or, Georgia or Alabama. But it is interesting too, because this is like the constant question for a revenue manager is the pacing because people are just changing their behavior, or are they following the price point they're willing to pay? Right. Um, if it's the latter, that implies things for places where you're not pacing. If it's the former, then who knows? Like, then we just have to figure out what the actual consumer trends are going to be. Awesome. Thanks, Joe. Um, Amanda, do you want to talk to us a little bit about what you're seeing for the summer, what strategies you're kind of implementing, and how your team is approaching it?
Yeah, we've overall had a great outlook for summer so far. We've had really early leads, um, really early bookings at great ADRs, great occupancy pacing. Holistically, we started to see a lag about the same time we started to see a lag in spring. I think overall, just bookings started to decline. I think it was more just in general, but that's picked back up now without us having to make significant changes. We're not having to drastically lower rates. We're not having to drastically change anything. It's just the demand kind of shifted back into it. But overall, our summer's looking great. Even in like the Northeast in our Cape Cod market, uh, we've already, say on a same store basis, we're already past July and we still have a lot of availability left to book. And August is almost right there at it. We're seeing, summer has been like the one season that hasn't caused me a lot of concern throughout the year, or not a lot of concern, but it's been one of those things that's like, okay, this is still going good. Like even with there's been a little dip, it's been temporary and come back up. I think the only places we're really seeing some stuff struggle is some of our homes where it's more owner driven. They're stuck
Like
on
owner
things.
constraints.
Yes. Yeah. Where maybe they haven't fully adapted dynamic pricing or our stuff, and they're kind of still setting the tone of things. That's where we're seeing the lack, where the
Curious if
owners haven't quite moved into that aspect, because not all
curious
of
if
our
you
sites are fully dynamic. Some of them
curious
are
if you or
still.
anyone else is talking about how early Labor Day is, and that it's really not touching September at all. I don't know if that's come up, like as something, just an interesting, different dynamic this year.
I mean, I feel like it was about the same. Wasn't it the same weekend last year? And it was like the September 3rd.
I
Yeah,
think
so
it's
it,
I
that
think
like the
last year
idea that
September got one day. This year they're
yeah, like
getting no days. It's
yeah,
going to be that way for like 2 or 3 years. Like I think Heather, it's a good point. I think that we're thinking about it from budgeting more than we're thinking of it from a consumer perspective.
yeah.
But yeah, I mean, it's definitely it's great when you get a day or 2 or 3 in September. It's a completely different thing than it's all landing in August.
Yeah, it's very much when you go to do that forecasting, you're like, let's just shift that revenue. We're going to balance it over here now. Same thing with March and April, where it's just kind of like this year it's this way and this year it's that way.
Yeah. One thing I want to know, Amanda, is you mentioned that the pacing's looking pretty good. Your same store sales is ahead. In terms of the rate strategy your team implemented both a year ago and any changes they've made, like how did they approach that? Because I mentioned I'm looking at these market aggregates and people's rate strategy is we're going to push the rate 20% or 15%. How are your team approaching that to get to this pacing point?
We align a lot more with what Valerie mentioned earlier of taking everything in moderation. Of I don't have my team get hung up on ADR. ADR is one piece of the puzzle. And I think people tend to get too hung up on that. We focus more on total revenue for the home or rent for the home over time periods. I don't really care if you sell it at the same ADR as last year, if all in all, we get more money. Unless that's the opposite of what that particular, if we're doing something particular for a homeowner that is really doesn't want nights, but if we're just talking about, in theory, where we can actually do what we're supposed to be doing, we're going for total revenue. And so that ADR, if the demand is there, we're gonna capture it. Like if we're seeing a high uptick in demand currently, we're gonna push that rate a little bit higher and try to grab every dollar we can. But we're gonna be cautious on how far we're preemptively setting it up before that demand comes in. I would rather see the demand and immediately adjust to capture it than put expectations on and shave off demand because I've overpriced us to the market. And I see that a lot. I think you mentioned this too, where they've set the price here, nobody's really booking, and then all of a sudden last minute, and last year you were here, now all of a sudden you're having to wait till last minute and now you're selling it here. Because if you had just maybe brought it down a little bit, you could have captured it, and you could have captured it at a slightly higher ADR. So that's always been our methodology is yes, go for higher ADRs, but it doesn't have to be an automatic, everything's 20% higher next year. Read what's actually happening with your homes, what's actually booking, what's actually happening.
Yeah, I kind of talk to is organizations start to professionalize their revenue management and you have big enough scale to kind of do it. It's like I find that a lot of people, as they're learning, they get really hung up and spend like 90% of their time on like the next week or the next 30 days. And it's really the area where you have the most impact on revenue through occupancy, but actually very little ability to move the needle on ADR. Like you can spend a lot of time thinking about a $5 difference in rate. I generally suggest that people redistribute their time, not focus on ADR once you get within a point where you're like, I just need to get the heads in beds, and shift that focus a season, or like if you really want to be complex, like 1 or 2 standard deviations of your booking window out, because that's where you're going to be able to make minor changes. And that's where, like, when you're looking really far out and you're looking at comps, it's very hard to tell. You can see what the market is doing, but you don't know how optimized the market is to the consumer. And that's what you're really testing for, is like, hey, yeah, I know the market's all 20% higher than last year, but if the market's pacing behind, it's an indicator it's not optimized to the consumer. And you might be able to find a point that is still a very solid growth or a much better than market position that's maybe lower than what you are, lower than the market. And that actually takes a lot of time to think about. And it takes time to do experiments because you have to put rates out there, you have to get data back, and you cannot do that in a 30-day window. You get maybe like what, 1 or 2 1-week experiments. 60-day window starts to get a little compressed. And it really just, just pushing people to like shift off of focusing on ADR in the short term and taking that energy and focusing a little further out,
It's a
I think
really
is really
good
helpful.
point. And like people might say, oh, my booking window is 21 days. Like if you just think like along these lines, but to your point, there are early bookers. And even if it's just 1 or 2 a week, if you're getting them now for September, October, when you need them, you want to be a first mover and get any piece of that early booking activity that you can, even though it might be outside your average. But yeah, I totally agree with that.
Yeah, you want to
Yeah,
compress your inventory. You want to compress that, so that as you get closer, you have less and less homes available to be rented, and there creates more of that urgency, and you're more likely to fill them. Um, I think sometimes we miss that aspect, that I think hotel revenue managers really understand, is that market compression that sometimes vacation rental revenue managers aren't always thinking about. Not only the market compression, but also the compression within your own inventory.
totally.
The
I
other
use some
thing,
rule. Oh, go ahead, Valerie.
oh no, I was just going to say, as we're talking about this, and Amanda, you kind of mentioned it earlier. Um, the other thing is like really not looking at this as a whole, right? Like different bedroom types, different price points, different inventory types are so critical to get into the weeds on, because it's really easy to look at somewhere and be like, oh my God, I'm pacing great. There's a lot of market movement. Like, let me raise my rates on weekends, right? If weekends are doing really, really well. In the example Joe had, and like, that's great. Like, be careful not to do that everywhere, right? Like, greener revenue managers, I have this conversation with all the time. I'm like, you're doing duplicative action in places where you maybe don't need it, and you're not targeting the action to like the inventory that needs it, right? So like if there is a segment that's struggling and you need to like moderate price or bring price down, do it there. Like, everything doesn't need to get the same action. And I think like it's really easy to look at the whole portfolio and go like, everything's good. But like, what's happening to the bottom 10, 20%? What's happening to the top 10, 20, 10, 20%? And like, how can you roll that out differently and more specifically to where you're like really strategic to each homeowner? And also that hopefully gets you to like less homeowner constraints in the future, right? If they're not like, oh, you had to sell everything at the last minute for super cheap. Now I'm giving you a floor. A dose of prevention, pound of cure. I don't know, whatever that
Yeah.
saying is.
No, 100%, because it's that sometimes the details get lost in the aggregate. And just because your business is pacing up doesn't mean every single homeowner. So it's always going back and figuring out, okay, yeah, we're pacing great for June. Let's go find all the homes that aren't. And what are we doing about those? And where did we miss it?
100%. Um, why don't we roll into, Valerie, did you want to tell us about your team's strategies for summer and what they're seeing? And then I have a couple topics that I think might be interesting for us to finish out the conversation on.
Yeah, I think one thing, and I think Heather, you may have touched on this a little bit of like, will it come at the last minute? I think we have started to try to do a lot of research for peak dates that have happened, like in Tennessee, to really try to analyze like how much last minute demand did we have there versus other low periods where maybe last minute demand wasn't coming. to kind of get us to an area of like, where's our panic button, right? We're not there. We feel pretty good about summer, but we're trying to define that. Like, what is the point at which we say we think it's going to come, we think it's not going to? I will say in Colorado, Summit County specifically, just with what we saw this winter, even during like peak demand, right? Occupancy is not rising as high in the market. There is definitely caution. We feel really good about how we're pacing. Like, we're looking at the market, it's a secondary peak. So it's like still a really high demand time in Colorado. But we're also like really thinking through, is the market going to rise to where it did last year? And then like, what do we do for that, right? So again, that kind of comes back to that conversation of moderation, of like feeling comfortable with some early pace and not relying entirely on the last minute. There are exceptions, but like, I think it's been really helpful to really try to diagnose where we and like forecast where we think markets are going to finish, pay close attention to what DMOs and destinations are releasing as far as their data, and use that to make a strategic choice about where you feel comfortable. At the end of the day, it's all risk tolerance. And if you're concerned about softness in a market, I know not most markets aren't, but if you're anyway concerned about softness in last minute bookings or potentially not rising to the same level, I think now is the time to make a decision on how you want to deal with that, as opposed to within 14 to 30 days of arrival.
Yeah, I think screw whatever other questions I was going to ask. What are your guys's like? What are the factors or the calculations you're looking at to know when to hit that panic button coming up into the summer and or the fall? Joe, I know we wanted to talk a little bit about fall, but we're running out of time. But I think that's a good thing to bring up is, you know, we can combine them. Talk to me about the fall. Talk to me about how you're determining when your panic button, when you're hitting it. And why don't we start with you, Joe?
Yeah, so if I see bookings dry up within 14 to 7 days, that's when I start to panic. We have again, really shortened booking window. We're 1-bedroom condos, so hotel-like behavior. So that's well within our window. But if bookings start to dry up, I know I have to be really aggressive there because, you know, it used to be you get within 3 days, you got to crash rates. We're actually seeing that push back to about a week, and you got to crash them or it's dead. So I know it's important to be, you know, aggressive about 60 to 30 days out for us, but you know, once we get that 2-week mark, I'm watching stuff like a hawk, and if our pace is slow, it's panic, panic, panic. I think there was a great point made about, you know, setting your strategy so that you're not trying to fill all your inventory kind of last minute. You know, when you have that compressed inventory later, you know, if I've got, you know, a handful of rooms still available, you know, a week out, I'm fine. But if I've got 50% of my inventory, you know, I have done a bad job and I need to reevaluate my life. So it's just, you know, making sure I'm not just focused on 2 weeks out and know it's a long game and don't get myself into a position where I'm having to panic fill.
Yeah, I think that makes sense. And I think the thing here, because your booking windows are much shorter than, you know, due to the inventory, but you did say double your anxiety. You heard from Joe, double your anxiety. Awesome. Thanks, Joe. Heather, what are your panic buttons? How do you figure that out for the summer?
It's so funny. One particular partner came to mind when you said this, because this partner is like letting July get behind. And they're taking this approach of just the faith that it's going to come, you know, it's just going to come later. And so we've just been debating, like, is it time to hit the panic button if you're 5% behind the market, 5% behind your own pace this particular week or day? Is it 10? Is it 15? And this partner's just like pushing the envelope for those peak July. And so it's just an interesting debate. I saw John in the chat was also like, there's no right answer, you know, but Yeah, are there other like top of funnel data points we can look at? Like there's lots of views still happening. People just haven't pulled the trigger. You know, like all this positive stuff that's like, hold, it's okay, hold. Your 5 just went to -10, but still hold, you know. So there's just not a right answer, but I think it's that like team conversation around, is this the panic button or is this the panic button? And, you know, aligning around that.
That is a great point. Is when I was working at Stay Alfred, obviously you don't know the exact answer, but making sure people are involved, especially as a revenue professional, making sure your CEO knows like, hey, this is what I'm looking for. And if we're not hitting this, then I'm going to do this. So don't come to me and be like, why are all the rates low? It's like, because I told you I was going to do this. You can do the same thing with owners, right? You can kind of give them a pseudo choice, which is like, we can hold it, but once we get to this point, can I do whatever I want? That communication is really key, because at the end of the day, nobody in the room knows the right answer. You have to kind of come to a consensus that statistically you have the highest chance of having the right answer or a good answer.
Yeah, just what's the data story? Is there any other top of funnel data you could bring in? And then does that lend to the decision you make? Yeah.
Yeah. Awesome. Valerie, I'll hit you last because you brought up the conversation. Amanda, what are your team's panic buttons?
I think I'm going to switch back to Valerie's point about segmentation, and that being really important. So, like, I'll use our Cape Cod market right now. Like, I'm not in a panic about, I have some really, really expensive big homes that rent for a lot of money and only a week at a time. And it's Cape Cod. I get like 8 weeks and that's it. Some of these owners only give me 6 weeks. So I got 6 weeks that I got to go. If I've got a week open, I'm probably not at the panic button, but I'm watching it every day kind of thing and knowing, and it kind of comes back to that total revenue of, hey, I may only have a week open. Uh, where are the rates sitting? Can I get them lower without sacrificing their year-over-year gains in order to get that? I may not hit the panic button yet, but I'm going to start making those changes now. But then I also have a set that's similar to Joe's portfolio on the Oregon coast that's all little studio and 1-bedroom condos. I'm not worried about those. I'm not worried about those until like 3 days out. And then I'm like, all right, weather's looking bad. I'm going to drop rates on these. So I think the panic button has to be really like segmented, unless you're seeing the whole market take a hit. But again, I think it's about that communication about, when that you may be pacing 3% behind, 5% behind, you're like, okay. What happens when it starts to get to that 10% behind? You're like, oh, okay, we need to make some changes now. And do you panic, or do you just do a bigger aggressive change to bump it back up, balance it back out without fully panicking? I think I like to call them micro panics, where you just have these little like, I'm not real crazy about this. I'm going to make a big enough shift just to maybe level it back out, but I'm not going to go, scorched earth on this yet. And see if I can't get myself to a healthy place again, and then level that out for a little bit and hold that a little bit longer. And I think that
I love micro panic.
Yeah, if people did that a little bit better, I think you wouldn't have that last minute freak out or freaking out too early and underselling.
Yeah, at Stanford, we used to call it divoting. We would identify roughly where, like, just before the peak window, which we would define. I'll tell you that after Valerie goes. But we would experiment with adjusting the ADR in that period and popping it back up when we corrected our pace. Awesome. Valerie, why don't you tell us your panic button since you brought up the idea?
I think I'm more aligned with Amanda of like, look, it's different for everything. I'm setting it very specifically. I've been known to make other people panic. I don't like to make myself panic. But I love an I told you so moment. So look, I think what I tell my revenue managers is like, I need to be able to justify what we're doing, right? There has to be logic and strategy behind it. I am fine with the trend changing. I'm fine with the booking window shortening. I am fine with your ADRs being low early, but high late. Like, I am fine with this. I need to understand why we are doing this. Why are we convicted in it? And then we need to identify our like marks and check boxes of this is on the rails the way we think it is, right? And constantly checking in on if that strategy we're deploying is panning out how we see fit, right? And I think that's kind of what I mean by defining the panic button. If I know that I'm trying to lengthen my booking window, not getting advanced bookings tells me my strategy is not working and I may need to like do something a little bit different. So it is really specific to what I'm trying to do and where I'm trying to get to. But I think having that definition kind of removes the ego at the last minute of like saying, oh, I was wrong. Then it's like predefined if this is the point at which we're going to throw our hands up and say, okay, maybe this wasn't the right bet. Let's pivot. So I like to know in advance of like, this is the point at which we're going to say this is working or it's not.
Yeah, I totally agree with that. When I was with Stay Alfred, we didn't, we had concepts of like triggers all the time where like you're like, if this doesn't happen, this is the route we're going to take. And I tend to try to phrase things. I worked in a big team. We had 10 revenue managers, so it's very hard to create logic trees for all these situations where you're like, oh, if it's not at this number, do this. Instead, we did guidelines, right? Or like mantras where it would give you a strategic idea of what to do and it kind of informed the behavior, but it didn't tell you the exact behavior. So for us, the panic button often was like we would look at booking windows in a few heuristics and then we would find the specifics as they related to each market. But basically it was like we looked at early window, peak window, end of window. And the starting point for that was peak window is like 50 to 60% of reservations are on the books. And the expectation there is like we should be selling, we should be on pace occupancy wise, and there's some room around the ADR, right? But the goal is like stay on pace, or if we did poorly last year, be above pace. Early window, that first 20% of reservations either on the books in the market or on the books in our historicals, that's like when we really wanted to start paying attention to stuff. Like we weren't really telling people to deviate too much from the rate. We wanted to maintain our rate position unless we had a good idea. But that's telling us how far out we really needed to be paying attention to these is for this season, when are 20% of bookings on the books for the portfolio. That last 20% end of the window, that's when it was like, I don't care about the ADR. Do what you need to do. Fill the rooms so that we're at or above pace. And ideally, if you're going to abandon ADR, get above pace on occupancy because it's going to make up some of that ground. Then the third kind of chunk to that would be if you're noticing that we're probably not going to hit the point that we're forecasting, especially by peak window, tell people so we can come up with different plans of what to do between peak window and end of window. Also, start looking at the next season to see if there's room for us to change our strategy there to make up revenue, either by driving more occupancy or taking advantage of rate. But those kind of guidelines where you like, I think that heuristic is good. Figure out your early window, peak window, end of window. End of window, heads and beds, don't spend a lot of time of it. Peak window, you really need to be aware of your pace and you're starting to adjust the ADR to be on pace. Early window is telling you when you really need to start paying attention. I think that's a good guideline, and then you can fill that out with the specifics of your market or your segmentation, right? Because we would do it for different bedroom counts differently. Awesome. Okay, guys. Well, really appreciate your time today. We talked a lot about pacing, so if anyone does need some access to data on pacing, Wheelhouse Performance Insights are free. We'll show you how to look at your pace. Last plug, I promise you. But really appreciate your guys' time. This was a great conversation. I hope everyone who is here found it helpful. And this will be recorded and hosted, so feel free to tell your friends or go back and hear some of these great things. Thanks for everyone on the panel.
Thanks, Sean.
Bye, guys.
Hi, guys.